Chinese online grocer Dingdong Maicai drastically cut the size of its initial public offering, but its founder Liang Changlin insists the industry still has a great deal of potential for growth and the Shanghai-based startup is ready to capitalize on it. "I am confident of our growth," he says in a phone interview with Forbes. "A lot of companies are attracting users with cheap prices, but we'd rather compete by offering products of quality." Liang wants investors to focus on Dingdong Maicai's long-term potential, and says his company has advantages in terms of quality control, securing supplies and understanding user needs in an increasingly crowded market. Dingdong Maicai slashed its IPO fundraising target by 74% just prior to its debut on the New York Stock Exchange on Tuesday. Later the same day, the company said it had managed to raise $95.7 million by pricing 4.1 million American depositary shares at $23.50 each. Previously, the target was $357 million. Similar to its director-competitor Miss Fresh, the company has been met with weak demand from investors. Miss Fresh saw its share price drop by a third from its IPO price, including a 26% tumble during its Nasdaq debut last week. The Beijing-based online grocer backed by tech giant Tencent had earlier raised $273 million from the offering. Beginning last year, Dingdong Maicai has been a beneficiary of the coronavirus-induced lockdowns that prompted many Chinese consumers to order fresh produce online and have them delivered to their homes. Its average revenue per order reached 70 yuan, $11, in the first quarter of 2020, but that figure has since dropped 23% to 54 yuan in the first 3 months of this year as the restrictions were eased. The company said its total revenues reached $1.7 billion, an almost threefold surge from $600 million in 2019, according to its prospectus. But its net loss widened to $485 million, compared with $290 million a year ago, as it had to spend more to source supplies of fresh produce and compensate its delivery partners. Dingdong Maicai isn't Liang's first venture in the business world. After retiring from the Chinese military, the entrepreneur developed in 2002 a video cutting and merging tool called Easy Video Joiner and Splitter. With money made from the then novel service, he founded a parenting and maternity discussion platform called iYaya.com and Mama Bang a year later. Both were sold to New York-listed Chinese education firm Tall Education in 2016, according to Liang's LinkedIn profile page. He spotted opportunities in the on-demand grocery market in 2014, as many startups rushed to deliver services, everything from cart washing to pet grooming, to consumers' doorsteps. Dingdong Maicai was founded in 2017, and Liang developed his frontline fulfillment grid model that allows the company to achieve last-mile deliveries more efficiently.